Welcome to Policy Bazaar. I'm Arun Bhagat. Now, most of us can easily answer questions about the basics of car insurance, its main features, and how to buy perhaps the best policy. But there are still a fair number of aspects of car insurance that most of us may not be familiar with. These include reducing your car insurance premium, filing your claims properly, and negotiating with your car insurance surveyor. To understand the finer nuances of car insurance policies, we have with us Yashish Daya, CEO and founder of Policy Bazaar. Welcome to the show, Yashish. Now tell me, why do two companies never have the same premium for the same car?
So let me just clarify.
I mean, that always confuses me.
Yeah, so let me just clarify, it's not never. So there is a rack rate which is the same for all insurance companies, right? So that's basically, based on the insurer declared value and the percentage and a certain percentage. However, every insurance company, first of all, most insurance companies end up having slightly different views of what is called the insured declared value. Insured declared value, car that's being insured, so how much is being insured for. And there's a certain amount of flexibility provided in the law to both the insurance company and to the individual to change that. So you can increase it a bit, you can reduce it a bit. It's typically between 5 to 10% that can happen. Second thing is, every insurance company has a different view of risk, right? So it's a de-tariffed market. Motor insurance is de-tariffed. So you don't have to have a fixed price for a particular car. You can choose to give whatever discount you are comfortable with. So some people believe a particular car belonging to a particular individual, has a lower risk than what the other person believes. Let me give some examples to you, which would clarify this.
So basically, we're trying to understand how insurance companies calculate your premiums.
Exactly.
Right?
So let me give a very simple example. Suppose somebody had a Tata Indica. Now, without being politically correct about it, a lot of Tata Indicas are driven as taxis.
Right.
Now, if it becomes clearer that the Tata Indicas have a high probability of being used as taxis, that now taxis run far greater kilometers. And, they run day and night, and they could be doing 20,000, 30,000 kilometers, whatever. They'll be doing a much larger number of kilometers than the non-taxis, right? And hence, their premium will become higher. However, now the same companies have raised the price of Tata Indica. Now, when you get to digital channels, like online, let's say Policy Bazaar or the company's websites, now the taxi drivers don't go to these sites to buy car insurance. And so what you find is the same Tata Indica, when it's bought digitally, is being bought by individuals. It's the individual drivers who are buying. And hence the premium comes down. Profession. Different professions end up having different usages. Different locations. So it's very clear, if you are driving most of the time in, let's say, Chanakyapuri versus Karol Bagh, chances of getting a hit are higher in one of these locations. The number of kilometers you drive will have an implication. So location where you are living, number of kilometers you drive, how often do you drive, total mileage, all these factors start to play in. So even diesel versus petrol, why are there different rates for diesel versus petrol? The companies assume that if you have a diesel car, you're likely to use it more. You bought a diesel car because you're going to have a higher mileage, right? So all those factors do play in, and companies have actuaries who work on this data, and hence they take a bet on what their cost is likely to be. And basis whatever cost they're likely to have, they're going to give you a price. They don't want to make abnormal margins because they want to get your business, but at the same time, they don't want to make a loss on your business either. So that's how the pricing is done.
For the consumer, what are some of the do's and don'ts as far as buying insurance for your cars? Not only buying, but also renewing insurance, because that is when you can actually add certain things. That's when you get affected if you file a claim. Run us through that.
Sure. So see, while the companies depreciate a car, I think as an individual, if I have a car, it doesn't matter whether it's depreciated or not, unless I'm going to sell it. If an accident happens, it gets hammered, those things need to be put in place. I can't buy used parts, I have to buy new parts, right?
Precisely.
So I think taking a zero depreciation cover is important.
Zero depreciation cover.
Although that will increase your premium. That will increase your premium by between 25 to 40%. But it's worth it, because if you have a claim, you will get pretty much everything that you paid for minus the salvage value. I don't want to get into salvage value right now, right? Second piece, let's not make unnecessary claims. So even if it's a small thing, just get it done on your own, because your no claims bonus does count. So people can get up to 50% discounts because of a no claims history. However, no claim bonuses can also be protected. So you could buy a no-claim bonus protector, specifically if you have 3 to 4 years of no claims. If you buy a no-claim business, discount protector, then what happens is, in case you have an accident, the company does not penalize you for that accident, because they say, okay, it's one accident in 3-4 years, it's okay, right? They let it pass.
So you actually have the option of buying that.
You actually have the option of buying a no-claims bonus protector.
And what would
It typically costs between 5 to 10% of the policy. So it's not very expensive, because remember, it doesn't hurt the company too much. And usually it's valuable to you only when you're a good driver. If you've got 1 year no claim bonus,
so what you're saying, zero depreciation, number one, and number two, no claim deduction. Yeah, right, yeah. Bonus protection.
I think having an engine protector is very important, because not many people know, but if you get stuck in the water somewhere, which happens very often in NCR, where 35% of India's cars are, if you as much as try to start it again and again and the engine chokes, you will not get insurance.
Because that is something that you have inflicted. Is that how it's looked at?
You have inflicted. You're not supposed to try to restart your engine. You're supposed to just sit there.
No, I've heard this story of woe many times from people.
A lot of people with expensive cars have come in and said, hey, but if you have an engine protector, then you're covered. Even if there's a leakage in the engine. See, why do engines seize? Either water gets in or there's a leakage of oil. In any of these cases, you are unlikely to get covered if the event had happened, the triggers were there, and you kept pushing the engine, right? So one needs to get that coverage. I think doing a quick comparison is a very helpful thing. It takes about 5-10 minutes. You get to see the prices available from all the different providers. Now, something called a voluntary excess. See, chances are that if the claim is less than, let's say, let me take my example. If the claim is less than 5,000 rupees, I'm not going to bother, because I have a no claims bonus to protect, which is about 50%. So I think taking a voluntary excess only helps, because a voluntary
excess... Does that bring your premium down?
It brings your premium down. So a voluntary excess will clearly bring your premium down. Having memberships of the Automobile Association of India, or having certain security features on your car like alarm clock, etc., fitted by reputed agencies, will further bring your premium down, because companies face losses when cars get lost, or if you're a better driver, there are certain advantages that come in. However, the most important thing, and I have myself fallen victim to this, please ensure that your premium is paid before your next renewal is due.
That's a very important one,
because I have not made a claim since 1990. I had 65% no claims bonus, and I lost it because I missed the date, and I had to start from zero no claim bonus again. So I had to pay 3 times.
And that'll lapse immediately. There's no grace period like you have in health insurance policies and all that.
By the way, you don't have a grace period in health insurance policies.
You don't also have that. Okay.
So in none of the general insurance policies, both health insurance and motor insurance, there is no grace period.
So I stand corrected. So no grace period for health insurance or motor insurance.
You only have grace periods in life insurance.
Right.
We've been requesting the regulator to make it auto pay. That somebody may say just keep taking the payment. Don't, because many times people forget. It's not because they don't want to pay, or a lot of people just forget. So give them the option of paying on a continuous basis, either monthly payment or. So we're trying for that, but I think it may take some time, and I think the regulator is thinking along those lines. But clearly, do not miss the premium date.
Right.
So these factors should help you reduce your claims and eventually drive safe here. Why have accidents? Try to be safe. Of course, we have a knock for knock industry where somebody else can come and knock you.
Right.
But chances are, if you're a defensive driver, that's likely to be.
Well, you talked about claims. Now that is a real heartburn of an issue.
Sure.
People are afraid to claim. They don't know, they don't understand the process properly. It leads to all sorts of unpleasant situations with the insurance company, the workshop. How should one actually go about and say, all right, how do I file a claim so that all these unpleasantries don't really happen?
So, Arjun, it totally depends. There are different situations, and we need to cover each one of them separately. So, there are 3 basic types of situations. One is a car is lost. And there's a separate process for that. We'll go over that. Second is a car is damaged in an accident, which is the most prominent. And the third is there's some form of breakdown, engine wear and tear, etc. Right? So I think let's go over the first one first. If a car is lost, one's got to file an FIR. You got to wait for about 90 days. After 90 days, the police would give you a no trace certificate, and only with the no trace certificate would you be able to receive your claim. You don't have to go to any garage, nothing. The no trace certificate needs to be set. The insurance company needs to be informed immediately, within 48 hours of the car being lost, and with the FIR. But it's on the no trace certificate that the amount would be paid or a new car would be made due, right? That's part one. Part two is, in case there's damage to the car. I think there are cashless garages. Just drive into any of the cashless garages. Just drive in. They would provide you a form, which you can fill pretty much there. Because they're a cashless garage, they have the form of the insurance company with them. It's a claims form. You can also download these claims from the company's websites, from websites like ours. People like us will also advise you for whichever company you have, which are the nearest cashless garages. So all that stuff exists. But go to the cashless garage. It is a smooth process. There is no issue. You will get your claim as per your contract. If you have a zero depreciation, if you have a return to invoice, if you have a no claim bonus protection, if you have a comprehensive policy, what all is covered, you'll get your claim. A third is basic wear and tear. See, once and making a claim, I think you got to look at your no claims bonus that you're protecting. So if you don't have a no claim bonus protector, the no claim bonus will go. So just think of it. Assume that next 2 years, how much you would save if you kept your no claims bonus. And for most, given policies are worth about 7,000 rupees on average, and a no claim bonus of even 1 year is 20-25%. So let's say 30% is the average. So if the claim is less than 4,000-5,000 rupees, I think it makes no sense to make the claim.
Right.
You will actually be better off not making the claim. Right. Now comes the third part, which is wear and tear. Remember, wear and tear, you don't get insurance claims for wear and tear.
Right.
So if tires are gone or some plastic parts have got hurt, those things you just kind of get done on your own. You don't bother with the insurance claims there.
Right. So I'll give you an example. You have a claim of say 60,000, car met with an accident. The company ends up giving you 40,000.
Yeah.
I mean, your cost is 60. Company gives you 40. Says that look, the surveyor, has surveyed it to this amount, and so we're sticking to a surveyor's report.
Yeah.
So what are the redressal mechanisms? Can you actually go and say no? You need to give me up for such reasons.
Okay. So see, one is before we get into that, cars do depreciate, and if you've taken a non-zero depreciation plan, you would get a lesser amount than what your cost is going to be. Even if you have a zero depreciation plan, the salvage value would be deducted. Because salvage value, it's an odd thing, but the insurance industry expects you to go and sell your own spare parts. But you can do a deal with the garage there. Now, in case you're unhappy, you believe something is wrong, the company is not being fair to you, the company is not paying properly, a surveyor can be appointed by both the insurance company and the individual. Like 99% of the cases is appointed by the insurance company. But you as an individual can also, in the extreme case, appoint your own surveyor. The insurance company,
how does one do that?
You just find a surveyor and you tell him to do the survey, right? You'll have to take his costs, so you will bear the costs.
Right.
You would then, it's a very rare situation. And you would present that survey report to the insurance company. That's if you believe the surveyor has not been, true to it. Now the insurance company has no obligation to take your survey report into consideration, but they usually would. If there is a survey report, it becomes a very strong case. I think you obviously negotiate with the insurance company and the surveyor in terms of what your damage amount is, and you also try to inform the ombudsman if the insurance company does not help you. Ombudsman, then the IRDA, and then you've got the normal courts that help you. However, as you make your claim,
right,
please make sure that in the claim you've given a very detailed report of, while you're filing the claim form, of what all needs to be corrected. Don't try to add parts again and again, because that's where surveyors get suspicious that maybe this is a damage from, see, what many people do is the car has been damaged 4-5 times, they've not made a claim.
Right.
Once some big damage happens, they say, okay, now let's get everything done in one go, right? And then they will try and claim. So then the surveyor will look, okay, this accident happened here, that accident happened there, how did both these accidents happen at the same time? Surveyors are trained at that stuff, right? So surveyor will...
experts in analyzing.
They're experts at that stuff, it's their job. So they will ask those difficult questions, and you have to have the answers for them. If you don't have the answers, they will not be satisfied. But if you mention them the first time and you've given the explanation clearly, that makes your case stronger.
Yashish, a lot of companies, a lot of dealers are giving free insurance. Some, are saying up to 3 years of insurance. So how does that work for a consumer buying a new car?
See, there are two things. there are no multi-year insurance policies for car insurance yet. There are for two-wheelers, and they haven't been filed yet, but they've been authorized for filing. Right? But for car insurance, you have a one-year policy as of today. Now, the first-year policy, usually the dealer does provide. It's also a financial incentive for the dealer to sell that insurance policy. However, from the second year onwards, the consumer has to pay for it on his own. Now, the thing is, and the second year onwards, the consumer can compare before buying and find out if he's getting a better deal somewhere else, or follow the basic rules that we said. However, there's an exception to this. When you have company cars, lease cars, there the car is actually owned by the lease company till you pay the final amount at the end of the 3 years, after which you start owning the car. Till then, the car is owned by the company. And out there, because the company is insuring its own car, the company can agree to pay the claims for the first 3 years, and they can buy an insurance policy to cover those. So basically, fleet kind of insurance they can do, or even individual insurance they can do. However, some of the questions that a consumer should ask in these situations, when somebody promises 3-year insurance, etc., what if there are no claims? Will the prices of that come down? What if there are claims? Will the prices go up? Is there any way they can be denied that insurance policy? Those are some of the queries that a consumer may ask. But as I know it, there is only 1-year insurance policies for motor insurance.
Right, Yashish, it's time for consumer questions. We've got Anurag Sinha from New Delhi. He says, is investment in private company policies secured if a person purchased a term plan of, say, 50 lakhs for at least 25 years from any private company? During this long period, due to certain reasons, the company announced that they are bankrupt or they're closing down their operations, then who will give the insured amount if the proposer passes away? How will their family get the death benefits?
Yeah. So the insurance companies do not have a mechanism to just shut down. They genuinely don't have that mechanism. It is the IRDA ensures that at any stage they have enough funds in them to be able to pay out the claims that are likely to come out of it. The second part, a bulk of the claim amount, especially in high risk policies like term insurance, critical illness, personal accident, are actually reinsured. So these are reinsured with the, let's say, 5 to 10 very, very large organizations, extremely large, largest organizations in the world pretty much. These are like Munich Re, Swiss Re. We don't see them, they work in the background. But for most life insurance policies, only the first 5 to 25% is actually covered by the insurance company. The rest is to be paid out by these reinsurance companies. So whether you are talking to company A or company B or company C, it's actually quite immaterial to a large extent, because the large part of the claim is actually going to be paid by the same company at the back end. And those companies are, we get this question all the time, whether it's an Aegon Religare or whether it's an Aviva or whether it's an HDFC, or they have pretty much the same reinsurers at the back end, or whether it's a Reliance. So, and they keep changing their reinsurer depending on the deals they have, but the reinsurers have similar policies. So eventually the claims are paid out by those guys, not even the insurance companies in terms of the total amounts. So I don't believe the consumers need to be worried about the company running out of money, ever.
Right, we've got Vikas Gupta from Mysore. He writes, is there any term insurance policy which pays after the term is complete? Can you give details?
Yeah, absolutely. There is a policy called the term return on premium. So what a return on premium policy does is, when the term is finished, you basically get all the funds that you have invested in that policy back, with or without return. So they can be a 10% return, 15% return, or, now please do not, this is where the consumer does get very confused, that 10 to 15% is total. It's not like 10% per year. So it's a one-time return. It's not very significant return, but you basically get your funds back. You will typically pay between 2 to 3 times what you would pay for a term insurance plan. So mathematically, a term return on premium is not a fantastic plan, but from if you feel better that you would get your money back, yes, then it's a good plan, and it's not very expensive compared to some of the other plans that you could end up buying.
Right, we've got Siddharth Chauhan, and he writes via email. He asks, he says he's 24 years old. He says, I earn 42,000 rupees a month. I want to buy a 1 crore plan for 30 years. Now he asks, which are the best life insurance options for me, especially in term insurance? Now he also asks, is online option better than offline? And he wants the reasons for those, Yashish.
See, online and offline, you pretty much get the same plans. The plans What pretty much? You get exactly the same plans.
But now there are a lot of companies who are not offering plans offline. Some of them, pretty much.
See, all I'm saying is you get the same plan on both sides.
Right.
For one, you are paying 2 times the other. It's your choice. If you feel happy doing that, please pay double. But otherwise, the online plan is exactly the same as the offline plan. As far as your claim is concerned, that's always going to be paid by the company. No distributor can pay your claim. You know, we're also a distributor. I can't claim that we will pay your claim. We cannot pay your claim. The claim will be always paid by the company that you've bought the policy from.
Right.
All we can do is we can go and talk to the company. So, and any agent can also go and talk to the company. Now, who is a 24/7 organization? So the online is an obvious choice. In terms of options, there are about 13 companies that offer term plans today online, and I think you should look at various things. There are too many features. There's an income benefit coming in. There is, so you know, you've got continued income. You've got lots of features out there. So it's very difficult to say this is the best plan. It'll be very naive for me to say that this is the best plan.
Right. All right, Yashish, that's all the time that we have on this show of Policy Bazaar. But do write to us at ask.policybazaar.com, tweet us at Twitter at @PolicyBazaar_in, and we'll see you next time with another episode of Policy Bazaar. Goodbye.